Drift Protocol, ticker Drift, is one of the rising DeFi projects on Solana focused on perpetual futures, spot trading, and capital efficiency. It blends features like cross-margin, yield-bearing collateral, and governance via its Drift token. The protocol aims to offer a seamless trading experience typical of centralized exchanges, but entirely on-chain with lower fees, fast settlement, and high liquidity. Right now, Drift is trading in the ballpark of 85 to 90 cents USD, depending on the source. It recently had a strong 24-hour jump, almost equal to 30-32%, and over the week has gained 40 to 50% in many markets. Trading volume is quite high, in the hundreds of millions USD per 24H, showing that people are really buying into its recent developments. Circulating supply is around 365 to 370 million tokens out of a max supply of 1 billion Drift. So only about 35-40% is currently in circulation. That means there is still a lot of potential supply to be unlocked, which could impact price later. Some of the newer updates and news that are helping the Drift story. Staking rewards and incentives have been boosted, especially around participation in governance and active trading. Drift stakers now get part of protocol fees and see discounts based on tiers. The introduction of yield-bearing collateral, especially via Maple Finance's Syrup USDC, lets traders put up stablecoins that earn yield even while being used as margin. That's a capital-efficient tool that can draw in liquidity. Another big development is in prediction. Given all of this, what might Drift do next in terms of price? If momentum holds and more of the supply is gradually unlocked without overwhelming sell pressure, Drift could push toward $1.20 to $1.50 in the near to mid-term. That assumes more adoption, more collateral or integration options, and that trading volume stays strong. If the broader DeFi Solana environment is bullish, higher targets like $2 or more could become possible, but that would require stronger catalysts, big partnerships, more TVL, wider usage. However, there are risks. The fact that only till the 35-40% of tokens are circulating means there is latent supply risk. If many tokens are unlocked and sold, that could put downward pressure. Also, performance depends heavily on how well Solana handles congestion, fees, and security, especially for futures or leveraged products. Drift also competes with other DeFi perpetual or derivatives DEXs, so differentiation matters. If users move to other platforms with better UX, lower fees, or more chains, Drift may need to keep innovating. Finally, there is typical market volatility risk. Macro factors, regulation, or crypto winter type moves hit DeFi tokens pretty hard.